Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Sirius Xm Holdings Inc. Annual Report. Sirius Xm Holdings Inc. is a leading audio entertainment company in North America that operates through two primary segments, Sirius Xm and Pandora and off-platform. The Sirius Xm segment offers a wide range of services, including music, sports, entertainment, comedy, and talk and news channels on a subscription fee basis. This segment also provides live, curated, and exclusive programming services through satellite radio systems and streamed through applications for mobile and home devices. In addition to its core services, the Sirius Xm segment distributes satellite radios through automakers and retailers, offers advertising and ancillary services, sells radios and accessories, and provides location-based services such as safety, security, convenience, maintenance, and data services. The company also offers music channels on the Dish Network satellite television service, Travel Link, a suite of data services, real-time weather services, music programming, and commercial-free music services for businesses. The Pandora and off-platform segment operates a music, comedy, and podcast streaming platform that provides a personalized experience for listeners through mobile devices, vehicle speakers, and connected devices. This segment also offers advertising services to its clients. Overall, Sirius Xm Holdings Inc. provides a diverse range of businesses and services, including music channels on subscription fee basis live, curated, and exclusive programming services, satellite radio distribution advertising, and ancillary services, radio and accessory sales location-based services, data services related to graphical weather and fuel prices, travel link data services, real-time, weather services, music programming for businesses, commercial-free music services for offices, restaurants and other businesses, wireless communications, service Pandora music, comedy, and podcast streaming platform advertising services. Unfortunately, I do not have access to the text you provided. However, I can provide a general essay on what may cause a stock price to drop. The stock price of Sirius Xm Holdings Inc. has dropped significantly over the past year due to various factors. One major reason is the decline in subscriber growth. Despite its efforts to expand its services and improve customer experience, the company has struggled to attract new subscribers, leading to a decrease in revenue. Another factor contributing to the drop in stock price is increased competition from other streaming services. With the rise of music streaming platforms such as Spotify and Apple Music, Sirius Xm has faced stiff competition for market share. This has led to a decline in its subscriber base and a subsequent decrease in revenue. Additionally, the company's high debt levels have also been a concern for investors. With a significant amount of debt on its balance sheet, Sirius Xm has had to allocate a substantial portion of its cash flow towards interest payments, leaving less room for investment in growth initiatives. Lastly, changes in consumer behavior and preferences have also impacted the company's stock price. As consumers increasingly turn to streaming services that offer more flexibility and customization, Sirius Xm's traditional satellite radio model has become less appealing. This shift in consumer behavior has led to a decline in subscriber growth and revenue, contributing to the drop in stock price. Overall, the combination of these factors has resulted in a significant decline in Sirius Xm Holdings Inc.'s stock price over the past year. Sirius Xm Holdings Inc. market capitalization of $7 billion is materially smaller than most of its industry peers of roughly $24 billion. Sirius Xm Holdings Inc. trades at a lower price-to-earnings ratio of 10 times and a lower price-to-book ratio of 0.63 times relative within the industry. This suggests a potential market detachment, as Sirius Xm Holdings Inc. trades at discounted levels while the broader industry remains fairly valued, warranting deeper fundamental analysis. The leverage on the balance sheet appears elevated, with liabilities of 58% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Liabilities have increased, while assets and equity have failed to keep pace or declined. This suggests the business is not growing and may be in decline, making it a highly unattractive investment from a risk perspective. The company has continued buybacks despite weak revenue growth, raising questions about capital allocation priorities. The company have a dividend yield of 4.98%. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and his management is unable to expand the business. The primary drivers of revenue growth or decline for a company are multifaceted. Revenue recognition policies have undergone changes over time, which may impact reported income. Impairment charges have been recorded in previous years, affecting net income and retained earnings. Fair value measurements are used to determine the value of certain assets and liabilities, but can be complex and subject to various assumptions. Revenue growth has been driven by factors such as subscriber acquisition costs, sales and marketing expenses, product and technology expenses, general and administrative expenses, depreciation and amortization, and share-based payment expense. The company's tax-efficient investments in clean energy technologies have also contributed to revenue growth, producing tax credits under Section 45Q of the Internal Revenue Code and related tax losses. However, unrecognized tax benefits in uncertain tax positions may affect the effective tax rate if recognized. Tax audits are ongoing, but the company does not expect a material adverse effect on its financial position or results of operations. To gain a deeper understanding of the company's operations and financial health, it is essential to analyze these factors and their interplay with each other. In particular, examining the relationship between revenue growth and operating expenses can provide valuable insights into the company's financial performance. By identifying specific drivers of revenue growth and assessing the impact of impairment charges and fair value measurements, stakeholders can make more informed decisions about the company's financial health and future prospects. The net income of the company underwent a significant transformation between 2024 and 2025. Initially, it decreased by an unspecified amount in 2025 compared to the previous year's loss of -$2,075 million. However, upon closer inspection, we find that the net income actually increased by $433 million from 2024 to 2025, indicating a substantial improvement. A more detailed analysis reveals that the company's net income rose from a loss of -$2,075 million in 2024 to a profit of $805 million in 2025. This represents a staggering increase of 139% or $2,880 million. The adjusted EBITDA margin also showed an improvement, rising from -75.7% in 2024 to -30.3% in 2025. These changes suggest that the company's financial performance has significantly improved over this period. The company's financial performance indicates a strong ability to generate positive operating cash flow. According to various summaries, free cash flow has increased by 24% from 2024 to 2025, reaching $1,256 million in 2025. Additionally, net cash provided by operating activities also shows an increase, from $1,741 million in 2024 to $1,898 million in 2025. Furthermore, the company's long-term debt has decreased significantly, from $10,314 million in 2024 to $8,648 million in 2025. These indicators collectively suggest that the company is generating sufficient cash flow to meet its financial obligations and invest in growth opportunities. The company's debt level has undergone a significant change. According to the financial data, the total debt increased from $9,717 to $10,391, indicating an upward trend. Furthermore, the long-term debt also saw a substantial increase, rising from $8,648 to $10,314. These changes suggest that the company's reliance on debt has grown, which may have implications for its financial stability and future prospects. The performance of various segments and regions within the company has been a subject of concern. Two areas that have shown significant decline are the Sirius Xm service and the Pandora ad-supported service. The Sirius Xm service has experienced a loss of subscribers over the past 2 years, indicating a downward trend in its popularity. Similarly, the Pandora ad-supported service has consistently lost monthly active users for several years, suggesting a lack of engagement with this particular segment of the market. These underperforming areas highlight potential issues that need to be addressed by the company to improve overall performance and competitiveness. Management's outlook on the company's strategy is one of growth and innovation. The company is actively working to modernize its infrastructure by retiring old satellites and replacing them with new ones. This effort will not only improve the overall efficiency of the business, but also enhance customer experience. In addition, management has identified clean energy technology as a key area for investment. Through tax-efficient investments, the company is supporting projects related to industrial carbon capture and storage, demonstrating its commitment to sustainability and reducing its environmental footprint. Furthermore, the company's variable fee agreement with Sirius XM Canada, based on a target operating profit for Sirius XM Canada, suggests that management is focused on optimizing financial performance through strategic partnerships. This arrangement allows both parties to benefit from each other's strengths while minimizing risks. Overall, these initiatives indicate that management is prioritizing innovation, sustainability, and financial discipline in its strategy to drive long-term growth and success. The company has a history of rewarding its shareholders through various means. One way it has done this is by paying dividends. In fact, the company has confirmed that it has paid dividends, with a total amount of $365 million for the year 2025. This demonstrates the company's commitment to sharing its profits with its investors. In addition to paying dividends, the company has also taken steps to return value to its shareholders through share buybacks. Specifically, in the quarter ended December 31, 2025, the company repurchased a significant number of shares, totaling 2,167,609. This move is likely aimed at reducing the outstanding share count and increasing earnings per share for existing investors. Supply chain disruptions loom over industry. The automotive industry is facing potential disruptions to its supply chain, which could have far-reaching consequences. One concern is that automakers may not include Sirius XM service in their products, potentially affecting consumer demand and sales. P2. Additionally, the imposition of tariffs on imports from various countries could impact the availability of auto parts and vehicle sales. P3. The industry's reliance on data from auto dealers and third parties for pre-owned vehicle sales also raises concerns about supply chain disruption. P4. This dependence on external sources creates vulnerabilities that could be exploited by disruptions in the market or changes in consumer behavior. Overall, these factors suggest a potential for supply chain disruption that could have significant impacts on the industry as a whole. That concludes the financial summary for Sirius XM Holdings Inc. Feel free to comment below, and I will be happy to answer them when possible.